Okay, so that's in the last question on chapter 12. So water waste continuing problem. Okay. So I'm going to share with you my slides. Just give me 1 second. Where is it here? Okay, so this is the question. Okay. So this question is very similar to the one, I believe 2 students, Ashley and Jimmy. Did you guys send me the question? So this is about one of the questions in the assignment from the Wiley Plus. So this is very similar questions, okay? So at the end of June, the manager of ABC manufacturing factory was provided with the following variance report. So you can see the budget, the actual and the variance, the difference, and whether it's favorable or unfavorable, okay? Oh, Nima also asked about this question. Okay, yeah, Nima also asked about this question. Yeah, and you know the production units, okay? So they are able to produce more, okay? $19,000 more, sorry, 19,000 units more, so that's favorable. And in terms of production cost, okay, they have subcategories: the direct material, direct labor, variable overhead cost. Okay, so you can see all the costs when you compare the actual versus the budget. All these costs are unfavorable. Okay, fixed cost is favorable. Okay, you save $25.83, and the total production cost is unfavorable. Okay, so the manager immediately called the production supervisor, demanding an explanation for the large unfavorable variance for the quarter. It's quite big, total $63,000. Okay, the production supervisor was puzzled. He thought that the cost-cutting measures they had incorporated were beginning to work. He certainly wasn't expecting such a large discrepancy. So the budget that was created in chapter 10 was used to establish the standard rates. The factory was using its normal costing system. They are summarized here. So direct materials, each unit will require 1.1 kilogram, and each kilogram costs $1.50. Direct labor, each unit will consume a quarter hour. Each hour costs $18. Predetermined overhead rate variable is each unit half a quarter time hour, each hour 1.5. Fixed, same volume, but the cost is $2.3 per hour. Okay, we were also provided with additional information here. So a total of 400,000 kilograms of direct materials were purchased during the quarter at a cost of 1.55 per kilogram. A total of 380,990 kilogram direct materials were used in production to manufacture 357,000 units. Payroll recorded 88,325 direct labor hours at an average cost of $17.80 per hour. Do you agree with the factory manager that the production supervisor performed poorly, as might be indicated by the large unfavorable variance? Explain why, include your response calculation of all production variances. Okay. So yeah, when you directly compare the budget number versus actual number, you get a very big unfavorable balance. Okay. Is this the reason you would, blame the manager for performing poorly, right? So then we have to do some variance analysis here. Okay, we have to do some variance analysis here. So here, let's think about the direct materials purchased. Okay, here. So a total 400,000 kilograms direct materials were purchased at a cost of 1.55. So what is the standard rate per kilogram direct materials? Can anyone tell me what is the standard rate for the direct materials? Jimmy?
That would be $1.50.
Yeah, $1.50, right here. Right. So now, okay, they purchased 400,000 kilograms of direct materials at a cost of 1.55. So I want you to tell me what is the price variance for the direct materials purchased. What is the price variance for the direct materials purchased? Do you remember? Do you still remember how to do this calculation? Okay. So remember in the middle is the actual quantity and standard price, right? So we know the actual quantity, the direct materials purchased is 400,000 kilograms, right? The 400,000 kilograms direct materials, that's the actual purchase, right? But the purchase, the actual price is $1.55. We know the standard is 1.5, right? So when I compare these two, okay, so the difference, if I use the left box minus the right one, the difference should equal to 200,000, right? Because the price is 5 cents higher than the standard rate. So in the end, I'm actually paying $20,000 more to purchase 500,000 kilograms of direct materials. So that is my material purchase price variance. Does that make sense? Okay, you want to purchase $400,000, right? That's the actual purchase. So you actually purchased $400,000 kilograms of direct materials. The standard rate is $1.5, but what you actually pay is 5 cents more. So therefore, you have an unfavorable variance. That amount is $20,000. Does this make sense? If it makes sense, please sum up. 1, 2, 3, sum up. Okay, good. Okay. So that's the direct materials purchase, right? So now, what is the quantity variance, right? What is the direct materials used? That quantity variance. Okay. So now you compare the actual quantity versus the standard quantity at the standard rate. Okay, at the standard rate. And you know the standard rate is $1.50. Okay, so now you want to know what is the actual quantity of the direct materials used, right? What is the actual quantity of direct materials used? So that is 380,990 kilograms of direct materials were used, right? So here, the actual quantity materials used is 380,990 times the standard rate 1.5. So what's the standard? What's the standard quantity? Okay. So the standard quantity here, that's going to be, okay. For direct materials, each unit, right? The standard is for the direct materials, each unit is going to use 1.1 kilogram, right? How many units we have? So in actual production unit, actually we produced 37,000. And each unit is going to use 1.1, right? So therefore, my standard quantity, the kilograms, is 357,000 times 1.1. That is my standard quantity of the direct materials. And the direct standard rate is 1.5. So if I use this number minus this number, if I use 380,990 times 1.5 minus 357,000 times 1.1 times 1.5, so that should equal to negative 17,565, and this is favorable. This is favorable. Okay. So do we have a question about this? You can see what is the price variance for the direct materials you purchased, right? What then for the direct materials usage, right? That's the quantity variance, right? That's the quantity variance. So what is the amount of the quantity variance for direct materials used? Okay, so we are able to calculate that. Ashley, you raised your hand.
So on that other slide, it had the budgeted units. Is there any point in which we actually use that, or do we always use the actual quantity of units for the variance?
So you are saying this number, 380,990?
No, the one that we had to times by 1.1. The
Oh, here.
357, that was the actual, not the budgeted. So when do we actually use the budgeted?
When do you use the budgeted? I think when you do the fixed cost, that's where you use the.
Okay.
Because when the fixed cost is a static budget, right? Do you remember the difference between a static budget versus a flexible budget?
Yeah, so then.
Yeah,
because it's
so for
static,
direct materials, you have to use the flexible budget, right? That means you use the actual level of activity, right? So that's the 357,000, right?
Yeah.
Yeah, but for the fixed cost, right? The fixed overhead, you would notice that, you know, they would use, when they figured out what's the budgeted variance, they would compare the actual cost against the number on the static or master budget, right? And that master budget number will be also compared with the standard. You get that volume variance.
Okay, that makes way more sense. I seen that question. I was like, I have no idea which.
Yeah, because this is all variable, so you are using flexible budget here. You don't just use the budget, because this budget number, this is the static, right? They are budgeted at 338,000 at this level. Does that make sense?
Yeah.
Okay. Anyone else have a question about this materials price variance and quantity variance? All good? Okay, so if you are okay with this, question, just give me 1 second. Please sum up 1, 2, 3. Okay, pretty good. Yeah. Let me know if you still have a question, okay? So now let's take a look at the direct labor, right? Direct labor. So again, remember that setup, right? Remember the setup. So I'm going to, this is the table format, okay? For calculation, but I like that the setup I have shown you, right? So I'm going to do this together with you. remember for direct labor, what I do here on the left side, I'm going to say what's the actual cost, right? Actual quantity, actual price, right? So that's on the, and this is your actual cost for labor. And on the, oops, on the right side, this is becomes standard quantity times standard price, and you get a standard cost. Okay. And then we are saying we want to create a box in the middle. Okay, you tell me what is here. What should I write here in the middle? Isabella?
Isn't it actual quantity and standard price?
Yeah, very good. Actual quantity times standard price. So that's what I want you to know, okay? And then the difference, if you use this minus this, the left minus the middle, so left minus middle, this is gonna be your, for labor, this is gonna be your, what? Rate variance, right? Labor rate variance, is that right? Right?
Yep.
Okay. And if you use middle minus right, you are going to get, what is this for labor?
Your quantity variance.
Quantity?
Yeah.
Variance, very good, right? So that's good. So now what's my actual quantity, right? You just have to be able to pull this information out from the question. What is my actual direct labor hour? Let's see. The payroll recorded 88,325 direct labor hours, right? This is actual direct labor hour. So 88,325. So here, just give me 1 second. Okay, so that will be 8. That's the actual, right? 88,328. And the actual rate, what's the actual rate? The average cost they pay the employee, the actual rate is, average is 17.80. So therefore, I am going to put here the left. What is the left? The left is actual quantity. So that's going to be 88,325. Okay. And times actual cost, the actual rate you pay the employee, 18.8. So this is my left. In the middle, the actual is the same amount, 88,325. What about my standard price for labor?
That would be $18.
$18. Yeah. Okay. Now moving to the right. Okay. What is the standard quantity? Right. We know the standard rate, that's $18 per hour. What about the standard quantity? Okay. So that's where we got it from here. Again, your actual level of activity is 357,000. Okay. And each unit, you're going to need 0.25 direct laborers, right? So here, what is my standard quantity? So here is going to be, I forgot that number. Okay, so that's 357,000. So here, 357,000 So that's each unit. And each unit is going to take 0.25 hours. Okay? This is how much the hour. And then times 18. So what's left is pretty straightforward, right? Just the calculation, right? So your labor rate is going to be, 88,325 times 7.8 minus 18. So that equals 0.2. So that's going to be 1765.2. Okay, so that's gonna be 56 0, right? Yeah, 56 6. Yeah, so that should be this number. Is that right? Okay, let me do a quick calculation. So you have 88,325 times 0.2. No, 17,665. Okay, so the labor rate variance is going to be this. Note this is a negative number, so this will be a favorable. Okay, and now in the middle, okay, and to the right. So here, I have 88,325 minus 327,000 times 0.25 times 18. Okay, if you get this number will be 16,650 favorable. Okay. So these are the two calculations. So does anyone have question about the neighbor variance? Okay, I will call 1, 2, 3. If you understand, please sum up. 1, 2, 3, sum up. Awesome. Good. Okay. So this is the labor. This is the labor variance. So far we have done a direct material variance and the direct labor variance, right? So now let's take a look at the overhead. Okay, the overhead. So we know that here, the variable cost, the actual variable cost is 132,488, right? And the actual production units, that is the 357,000. Okay, 357,000. So this number is just pulled from the question, right? 132,488. That's the actual cost for variable overhead cost. So 132,488. Applied, overhead applied, you use, this is the actual level of activity times 0.25 labor hour per unit and times $1.2 per hour, right? Per hour. So then you figure this out. You have a 1,387 favorable. Does this make sense for the variable? Does anyone have any questions? Yes, you're right, James. It's a queen size the pillow. Okay. Okay, so now let's take a look at the answer about the discussion. Okay. So basically, I have to share. Just give me 1 second. I'm going to share this screen. Stop share here. Let me just share. Okay. I need to share that. Where is it here? Yeah. Can you see my Word document? Okay. So you can see that basically, you have a static budget, right? That level of the unit is 338,000. But during the year, okay, you are able to produce more than what you thought. You actually produced 19,000 more units, right? Well, if you produce more, of course it's going to cost more money. So therefore, you should expect your cost, the actual cost, will be higher than the budget, right? Simply because the fact that actual cost is more than budget, so unfavorable, fire that manager, right? That's unfair because guess what? He was able to produce more, therefore it costs more, right? So that's something we know. We should at least conceptually understand. It does not necessarily mean when you have a negative variance, it's always bad, right? You just have to make sure that you are operating at the right level, right? At the right activity level. Okay. So let's look at this variance separately. So for the materials price, okay, for the materials price variance. So when you make a purchase on the direct materials, right, fluctuations on the purchasing price is going to create some variance, okay? How do you calculate that? It's simple enough. How much did you acquire, purchase, right? Times the pricing difference, right? What is the actual price versus what is the standard price, right? And the material quantity variance, the material quality variance. So this is the scenario that we want to know the quantity variance for the materials, right? The quantity material. So are we using this? Are we using this raw materials effectively, efficiently? Is there any waste, right? So basically here, so you calculated, okay? You calculated. Let me see here. You calculated the standard, okay, labor materials required. That would be the actual production level times the standard rate, which is each unit you have 1.1 kilogram, right? So for each unit, your standard is each unit of the product is going to use 1.1 kilogram. And what's the actual production level for the year? And that information is given. So that is the 357,000. So you use 357,000 times 1.1. That is the standard quantity, right? That is the standard quantity. So then compare that standard quantity with the actual quantity and times the standard rate. That's going to be your the quantity variance for the materials, right? Okay. So the labor price variance is positive because for each hour they save 20 cents, right? The budget, the standard rate for the labor cost is $18 per hour, but on average they only paid out actually paid out 17.80 cents. So you saved 20 cents every hour. Of course, this your pricing, your rate, labor rate variance will be favorable, right? How about labor efficiency, right? Are you using these people efficiently, right? So this one is also a favorable labor. It's also a favorable difference. So what happened is we have a favorable variance of 16,065, 650,000 favorable variance. Okay, why is that? Because the amount of the direct labor hours is reduced, is smaller compared to the standard. Okay, compared to the standard. So that's this part. Okay, just give me 1 second. Okay, so when you summarize, oh, also the variable overhead cost, right? The variable overhead cost. So we have demonstrate on the PowerPoint. Okay, just give me 1 second. Okay. Okay, so in the last slide of the PowerPoint, we have compared the actual overhead cost versus the amount of the overhead applied. And we realized that there's a favorable balance, very small balance, 1,300, but it's still a favorable balance, okay? So all this we are saying, all this, oops. So all this we are saying that you have favorable variance on direct material, direct labor, okay? And you have on the price variance, direct material, direct labor price variance, labor quantity variance, and the variable head variance, all favorable. How can you still blame the manager, right? After you're done this analysis, you know this is all this variance except one, they are all favorable, right? So the reason for that is once you adjust the production level from the static project to a flexible, the actual level of activity, you would expect the cost to be higher, okay? The cost to be higher. So you have to compare apples to apples, right? You have to compare apples to apples. So if you know the actual cost is driven by the actual production, right? So you better adjust your budget, right? From the static to a flexible budget to reflect the change in the activity level, right? Okay, so once you compare the apples to apples, you realize, guess what? Good job, right? Instead of blaming on him, you should, praise him, right? You should reward him, right? So you can see understanding all these things is really important, right? One day, if you are the manager, if you are the boss, the CEO, right? And you saw this result, right? And you fired him, right? So he's supposed to be a very competent, qualified manager. But you saw the number. Oh, I learned this from 2400. Okay, I'm gonna fire him because, right? Oh, by the way, if one day you become CEO, please remember me, okay? If I need a job or something. Oh, at least I hope that I have been very nice to you, so you at least will show kindness to me. Yeah, so you never know, right? Maybe you have a good job from me one day, right? So if you become CEO, if I need a job, okay, so, and or let's say you don't have, you can't be a CEO, but if you win a lottery, right? Let's say you win like $50 million and you just feel that I want to give out some money to some people. So please remember me, okay? Okay, so that's the variance. Okay, so I'm going to show you that PowerPoint slide. So I think students wants me to show these slides again. Okay, so you can see this is my slides. This is the materials. Yeah, remember my emphasis, right, during the class. So I want you to set up like this, right? It's gonna make things easier. So on the left side, you set up actual cost. So that's calculated with actual quantity times actual price. On the right side, you set up standard cost. That's your standard quantity and the standard cost, right? The difference between 1 and 3, that's your total variance, right? Total variance. But you can tease out further, right? In this case, you can tease out basically in the middle, right? You set up a actual quantity and a standard price. So then you can have a quantity variance using the middle minus the right. And you can also have a price variance when you use the left to the minus the middle, right? Whenever the result is negative, that's favorable, okay? If the result is positive, it's unfavorable. If you use 1 minus 2, if it's a negative, that means it's a favorable. If you use 2 minus 3, if that result is negative, then it's favorable, okay? And vice versa. So in this situation, you can see this number is positive, right? One is greater than 2, so that difference is positive. 2 is greater than 3, so the difference is positive. So under both situations, this is unfavorable variance, okay? So for the labor, it's the same idea, right? This is exactly the same idea. You have actual cost, standard cost. In the middle, that's the actual quantity times standard piece. You call this labor quantity variance. You call this labor price variance, okay? And the total overhead variance, okay? We have a total overhead variance. So you can see the total actual, we are talking about the variable component. So very similar, but overhead has 2 components, variable versus fixed, right? So for the variable component, overhead variance, I'm only talking about the variable, okay? So you have the total actual variable overhead cost versus the standard variable overhead cost. And that difference is the budgeted variable overhead cost, okay? Budgeted variance. If you have something in the middle, actual cost, actual quantity, standard price, 2 minus 3, that's your efficiency variance. That's your efficiency variance, okay? And the 1 minus 2, that's your spending variance. So just note all these special terms, right? All these special terms. If you're talking about spending variance, you are talking about overhead, right? You are using the efficiency, you are talking about overhead. Right? Okay, so you set up exactly very similar to what you have seen for the materials and the labor, right? You just, in the exams, if you have a question, just follow this format, right? But for the fixed overhead, there's a little bit exception here for the fixed overhead, okay? For the fixed overhead, this number 2, that's from your static budget. This one, this number, this number is not calculated by you. This number is directly from the static master budget, okay? And this time is not actual quantity. This time is the normal, okay, capacity. So that's kind of in your static budget, right? You are predicting what's the capacity. So this number, you didn't calculate it. It's directly from the static budget. And the actual minus the budget, Okay, so the difference 1 minus 2, right? So you are comparing the actual number versus the static fixed cost overhead budget. That is your spending variance. You also call this budget variance, right? Because you are comparing the actual number to the budget. So here is also, it's called spending variance. Okay, but when you compare this number from that budget, the static budget, versus your standard, right? You have a standard cost here. So that difference is called the volume variance. And the volume variance is not the budget variance. Okay, you see the difference? So this is the only element is not a part of the budget variance. Okay, so this calculation is the only element that is not part of the budget variance. See this part, the fixed overhead spending variance is part of the budget variance. Okay, so I just want to highlight this. This is the biggest difference between the variable overhead versus fixed overhead. Okay, so volume variance. This is the only time we use the term volume variance, right? If in exams we are talking about a volume variance, you should know they refers to the fixed overhead cost, right? And you should know how this is calculated, right? It's calculated by 2 minus 3 here. That's all the questions I received from the students, okay? I'm open to some random questions now. We still have 30 minutes. Oh, no, we still have 20 minutes. So I open the floor. Okay, so the students send me questions. I have answered all those questions. Did I? Or maybe I didn't. Anyone? So who will be in my 30 courses next semester? If you are in my class, can you please sum up? Okay, so quite a few of you guys. Okay, so I just want to remind you, make sure, because we are going to learn cost accounting. Okay, so you would notice that the first couple of chapters is kind of a replication of what we are learning right now. Okay, so it's important that you subscribe to the channel so you can have access to the videos, because the Moodle website will be gone, right? All the link I posted on the Moodle website through 2400, those links will be gone once we start a new semester. So the way for you to still have access to those videos is through just subscribe to the channel, so you will see the videos, okay? Because in the first 4 or 5 chapters, we are probably still doing the same things we are learning right now, maybe in a deeper level. Yeah. Okay, so anyone have any questions? Go ahead.
Could you, on the first example, it's really bugged me on the when they have the material variance with a efficiency ratio, you know, like 95% efficiency.
Okay.
That one really messed me up. Even if you could use the first example that you gave.
Okay.
Your first set of slides.
Do you have access to your Wiley Plus?
Oh, sorry, what was that?
You are talking about the question from the Wiley Plus, right?
Yes.
Do you mind sharing that question with me? Because I can't log into the website. I tried before the class.
Okay, I have to dig it up. Give me a second.
Yeah, so if you are able to share it with me, so I can see what's your question. I don't know why I couldn't log into that website now. So Ashley, did you take courses with me in the last 3 semesters?
Yep.
So I remember you take financial accounting, right? The two courses.
I didn't take 2100 with you. I took 3100 with you.
Okay, yeah.
And then
see.
I had to drop it because I ended up getting pregnant and I couldn't handle the course load I
Yeah.
had for
Yeah.
first semester. So hoping to do that one again, but it wasn't online this time, so
Yeah.
I couldn't do it.
Because you said you wish me to have you sent me for the good year, right? I was thinking, did I teach you for the whole year? And yes, I
Yeah.
did, right? For the whole year.
Yeah, you did.
Yeah, I can't believe 2021 is gone. So yeah, not very good. So I don't just too fast for me. I'm feeling really old.
This whole December 30, December is going by so fast for me with school, and then I'm considered full term on Friday, so I'm just hoping and praying this child doesn't come early on my test or something.
Kudos to you, Ashley. Good luck.
Thank you. I'm gonna need it. I've scared the shit out of myself already.
Yeah, I remember when I was a student. Yeah, I have very late nights. Like normally I would went home from the campus, the Lethbridge campus, probably after 11, right? It was funny. Sometimes it's pretty scary because at that time they don't have a lot of the lamps, the post lights, right? They do have. I'm not sure if they still have it. They have this safety walk. Do they still have it? Yeah, it was funny. Sometimes I noticed that the person in the safety walk, they are so bored, right? I said, well, why don't you guys go walk with me? So
I think
It's
security
usually
is the one
windy.
that does it now.
oh, it's the security right now. Before it's the
Yeah,
student
they have like
volunteers.
posts. Yeah, because when I got my first degree, it used to be like students, but
Yeah,
now
yeah.
there's like posts that you can
Oh.
like press the button and like security comes and like they can
Oh.
walk you if you want.
Oh, I
But
see. Okay.
I don't know. I left the university at like 2:30 in the morning
Yeah.
today, so it was okay. The walk wasn't bad.
Yeah. Lethbridge is not bad. It's relatively safe, I think. So Dan, I'm waiting for you. How is everything going on outside?
Yeah, I just emailed the question to you and
Oh.
the first, yeah, just so you
Okay.
could see them.
Okay, so just give me 1 second, okay? I thought you are going to share your screen. Just give me 1 second. Okay, so the question.
Yeah, because I messed that one up bad.
Okay, so I'm going to, do you mind if I show this one?
Oh yeah, go ahead.
Okay, so I had to do it properly without, okay, I had to do this. Okay, I don't want to show any people's privacy. Okay, just give me 1 second. That's this one. Can you see? Okay, are you able to see?
Yeah, that's the first question they asked you with the solution. And then
Okay.
I sent you another email before that that shows the actual question with the actual values.
Okay. So this question is about so direct materials variance. So you got this number wrong, right?
Yeah, it was the yield, the 95% yield and the 96% yield on the two different between budgeted and actual values. I wasn't sure how to use them.
Okay.
I also
So-
got that one wrong. I didn't
Yeah.
get it.
Do you
Yeah, I
have the
agree. Me
question?
too.
I cannot see the question.
Yeah, it's the email before that.
Okay, here. Oh, here is the question. Okay. So this is the question. So we have level production in liter, direct to labor cost. Okay, total, the actual production yield was 95% for LX-4 and the 94% for this. The actual production yield,
Yeah, so when I was using the numbers, for example, I was using the direct materials. I wasn't sure if I'm supposed to use 95% of that number. Am I supposed to add more to it? Don't just ignore it. That's where I
Okay.
kept on messing up.
Yeah, I see what you mean. Okay, let me read this carefully. So there are two primary chemical product. These two product, level of production, labor, and the planning assumption for this direct materials yield. A direct materials yield is this. Okay, so basically the usage, the usage of the direct materials multiplied by 96%, that should equals to whatever the production, the usage, right, consumed. So when you want to figure out how much you need to use it, you have to use that number divided by 96 or 95%. So here you see the division, right? Because you want to figure it out, right? You are saying that I'm gonna need 1810, right? But because of there is some kind of the waste, right? 5% of waste. You really need 1905, right? Because 1905, and then that would include that amount of waste, right? The 5% waste. So 1905 minus the 5% waste, you still get 1810 left, because that's the ingredients, right? You have to have that amount to make that product, right? So that's why you use that divided by 95%. Does that make sense? So
yeah,
it's like
what you're
you are
saying does,
shooting,
yeah.
you are shooting for 1810, right? That's your goal. But there are waste, right? So you have to have more than that. You are, because for the amount of ingredients, you need 1810, right? But because there are waste, right? There are waste. You want to make sure that you have to have more than 1810, right? To consider the amount of the waste.
Sorry, I have a question. So then why are you taking the 1905 and then dividing it by the 96 instead of the 1810 divided by the 96?
Here, okay.
Yeah.
So standard price 1908, sorry, this one, standard price. So we are trying to figure out the amount, right? Okay. So what is the 96%? Okay, just give me 1 second. What is the 96%? Okay, so the direct materials yield is 96%. And actual production yield, 95, 94. So this is actual production yield. And this is the direct materials, right? Yeah, so what happened is, you know, they are saying, this is also estimate, right? So instead of it's 95, maybe it's 96. So that number is not absolutely fixed. So that's also an estimate, right? That's also the estimate rate. That rate is like a labor rate, right? You are saying you are paying a standard rate is $18. The actual rate is $17.80, right? But this here, basically we are saying the waste rate is also, you can have a standard. You are saying, what's the standard here? So the standard here is, just give me a second. The standard here is 96. That's the standard. The actual was 95 or 94. Does that make sense? So 96 is the standard rate, but the actual rate is the 95 and 94. Okay, so then that's what happened here, right? So when you figured out AQ divided by 95, right? So that is the actual, 95 is the actual rate. And when you do the SP, the standard price, you are using the standard rate, right? That's 96% is the standard rate. Does that make sense? Standard rate here, actual rate here.
But why are you taking the 96 from the 1905 instead of the 1810?
Not the 1810, okay.
Yeah, because the
So-
1810 is like up at the top with the 8Q. So you go 1810 divided by the 95 equals 1905. So then why are you taking 1905 dividing it by the 96 instead of 1810 divided by the 96?
Okay, I see your question. So here let me take a look, okay? So standard SP, so 19, right? This is all 1900. Is this the, okay, so this is 1900. And this is how the total produced, right? So actual quantity, you use 18 divided by this. This is how much you need to bring in. And the actual price, okay, so actual price, so that's the direct materials cost. So you figured out what's the actual price per unit, yeah. And the standard price, 49, direct materials. This divided by 1905 divided by 36. This is actual quantity, right? Actual quantity divided by 9. Yeah, did I assign this question? In the exams, I won't ask you a question like this, okay? It's just the questions I give you in the example.
Yeah, I had this question in mind too, and I know I'd sent it just to go over for today because I
Yeah.
was totally lost.
Okay. Yeah, this question is a little bit challenging, okay? So I'm not sure if the answer is correct. So when they calculate the standard price, so what
Yeah,
is
because I guess
what
this
is-
is why I'm confused, is because
Mhm.
I thought that with the standard price, you would be taking, so like the 4,900, that made sense to me, because like I got all of this wrong too. And like I went through it and like that made sense as into why they're taking that, but then I wasn't sure, because I thought it would be like 1810 times like,
Hmm.
or sorry, divided by the other percentage.
Mhm.
But
Yeah,
I didn't,
I see what
wasn't
you're
sure.
saying. Yeah.
Yeah.
So if that's standard rate, so they are calculating standard rate. So you have the cost 49. What is this? This is the project. Okay, this is the projected cost, direct materials cost. So they are doing the standard. I was thinking this should be 19000, right? That's so this number should be, I think it's a typo. This one should be 1900 instead of 1905. Yeah, because what happened here is, you see, this 4900 and the 1900, this is from the project, right? When you calculate the standard cost, these are the numbers you are using, right? So I think this one screwed up. Maybe the people who prepare the answer, they don't know. Here, they should use 1900. Does that help you, Isabella? Yeah? If this number
Yes,
is,
it does. Thanks.
it
Because
should
yeah,
be
I wasn't, it
1900.
just didn't make sense.
Yeah, if it's 1900, that makes sense, right? Yeah, so you are right. Yeah, it should be 1900. So guess what? How much this is worth?
Yeah, I think it was worth a lot. Like I remember losing at least 6 marks. I think I did poorly on the question for sure.
Yeah, I did. I took way too long to do this.
Okay, so how much is it worth? Tell me. Can you guys take a look? How many marks, how many percentage this works?
I
I'm
have
doing-
to just quickly log into Wiley unless Dan has it open. I can log in.
Sure.
Yeah, it was out of 10 marks.